Good morning, everyone. I'm Barbara. Thanks for joining us today. We're going to go through a few slides to start, and then we're going to open up the floor to your questions. You are on mute, but you can chat your questions in from the bottom right-hand corner of the screen. We are keeping the questions in moderated mode to protect your privacy, but we will respond to any question that's chatted in. If you note the event board at the top right side of your screen, there you can find today's slides and other resources that we have for you. There are also dialing in instructions if you're having trouble with the audio. And then within 24 hours, you will receive a follow-up email with the link to the recording, the slides, and the resources, plus registration for our next webinar. With that, I will turn it over to Lori Winters, our CEO, to get started.
Good morning, everybody. Thank you again for coming into our town hall. This is, I think, our fifth one maybe in a row, and we're going to continue doing these as long as possible. We're going to try to bring new value-added content to everybody. So just quickly, I will get this kind of started. Everybody right now over so many of these things, PPP loans, EIDL loans, HR, Families First Act, CARES Act, everybody's confused, everybody's unclear, everybody's a little bit lost. And our goal of these town halls is to bring as much clarity as possible. Now, everybody knows that we don't have all the guidance that we need, especially on the PPP loans and the forgiveness. So our goal is just to bring as much to you as possible as we know it today. And in some cases, there's a little bit of interpretation. I keep going to the SBA sites, to the Treasury site, to the AICPA, and to sites that I believe are valuable and clear, and trying to give as much clarity to you as possible, and we'll continue to do so as long as you need it. So just quickly, our agenda today, I put together a real quick FAQ on the PPP, mainly around forgiveness, based on the research that I have done. And then I'm going to hand it off after that to Scott. Can people hear me? I'm seeing some people saying they can't hear. You want to, if you don't mind, just putting in the chat if you can. Okay, thank you. So maybe you can also dial in. Maybe I think Barb will reach out to you, but you can dial in if you cannot hear. So then I'm going to hand it off to Scott, who's our Chief HR Officer. You may have noticed last week that he had a little bit of a mohawk. He was going a little rogue. So he has now shaved that off. It's kind of sad, but it's kind of fun to watch. And he's going to talk about getting back to work, unemployment transitions, some return to work considerations. And then I'm going to finish it with just a little bit on the future of these town halls. And then our goal is to have at least half of the time for your Q&A. So make sure that you put in the chat. We also are going to answer questions that you submitted previously. And I really appreciate those questions that you submit, because a lot of our content is around those questions. And I do a lot of research to make sure, and so does Scott, to make sure we have answers. So quickly on the PPP FAQ. I'm going to go through these fairly quickly, but we've touched on a lot of them before. There's a couple new ones. We still don't have full guidance, but here is as we see it and know it today. When does the 8-week period begin? And that is the date the lender makes first disbursement of funds. That's when your 8-week starts. What is included in utilities? This is anybody's guess, but for the most part, electricity, gas, water, transportation, telephone, or internet service, which began prior to February 15th, 2020. Further guidance was added about gas when driving a business vehicle as being part of that. People have asked about garbage collection and security monitoring, and there's no real guidance on that. So I would ask your lender what their interpretation of that is. Method is used to determine the employee count when determining whether or not you have brought back enough employees or you have enough employees based on last year. The CARES Act states full-time equivalent, which usually means 30 hours is full-time. That's what's been used for other SBA loans in the past. That's also what's been used for the ACA, Affordable Care Act. So as we know it today, that is the meaning of FTE, full-time equivalent. Do I have to hire back all of the same employees? I've gotten that question a bunch. I've done a lot of research on it. There's no specific guidance that says either way, but you're going to have to submit documents to prove number of FTEs. It does not seem to point to needing to be the same employees. Again, the caveat is there's no real guidance on this yet, but from what I've seen, and I've seen a couple banks put together possible forgiveness applications, and it does not have specific employees, but actual number of employees. What about employees who leave or are terminated for cause? This is a really important one too. And as of now, there's no real guidance on employees who leave or are terminated for cause. The only thing that has been added, and I touched on this last week, is that if you offered an employee to be rehired that was laid off or furloughed and they refuse to come back, you can reduce that number from your FTE number. So you do have to make a written offer, same wages, but there's no real specific guidance on those that leave or are termed for cause. So there's a little bit of interpretation there. Can I increase employee pay during the time period? For example, a bonus. And I got this from, there's no real guidance on this on the SBA, but the AICPA, which is really trying to push the SBA to do certain things. The current guidance does not prevent an increase in pay in form of short-term pay increase, bonus, or hazard pay. There's nothing in there specifically to prevent that, but don't forget the $100,000 rule. So it would have to be prorated based on the $100,000 maximum that you can pay out. Are the expenses based on cash or accrual basis? This, as a payroll company, has been a big challenge for us because there's no guidance provided yet that says you use the pay period date or the actual pay date. Mainly the only thing that's been stated so far is that payments. It states payments. So that sounds like pay date. But in reality, when they put this together, most of us, business owners, HR, payroll people, we know a lot more about payroll than they do. So we've got a lot more questions than they probably thought through at the time. So we're hoping to get guidance on what that means, but just making sure that you get the full 2 months worth of payroll is the key. What if my payroll dates don't allow me to get the full 2 months worth of payroll? And we've taken a lot of questions from our clients on this. For instance, if they're a monthly payroll and the pay dates just did not align with the full 2 months, the full 8 weeks, what we're recommending is that you don't need to change your pay dates as long as you get 8 weeks worth of payroll or 2 months worth of your payroll covered. There are rare cases like the one I just mentioned, and you should talk to your account manager either with Thread or with your payroll company to figure out how to maximize, because we'll help you maximize that, whether you need to pull your pay dates in a little bit or out a little bit. But don't just do it to do it, because what you don't think about when you're changing pay dates is it causes a lot of issues with deductions, other types of earnings, and you don't want to cause a problem with that that's going to backfire a few months down the road where you hadn't thought it through. So talk to us if you don't feel like you're going to get the full 2 months worth, the 8 weeks worth of payroll. We'll help you figure out how to do that. Should I change payroll funding bank accounts? This is another one that has come to us a lot. And I know I made recommendations to start a new account for the PPP loan, which we have done and many others have done. But you don't need to change your actual payroll funding account. So what I've recommended is a good idea to put the money into a separate account. It's just going to be cleaner to account for where the money is going. But you don't really need to change the payroll funding account. Really, and I'll explain why, but it's going to be more of an accounting exercise. So making sure that you're taking full account for where the money is going. There are some items in your payroll that are not going to be forgiven anyway, such as the federal employer tax, anything that you're paying an employee that's over $100,000. If you paid out the Families First FMLA and you took the credits on that. So some of that's part of your payroll is not going to be forgiven anyway. So it's going to be a little bit cleaner if you move the money into a separate account if you want to. but that you pay out of your original payroll funding account is fine. You can just transfer money or write checks, but the main thing is just to account for it. It's more of an accounting exercise. So I've definitely talked to your accountant. I have a spreadsheet that our CFO had put together, and that an organization he's a member of has put together, and I'd be willing to share that, Barb, if you'll make sure that we get that out. So there's a spreadsheet of accounting for that, but make sure you're getting your CPA or accountant's advice on how to keep good records. Mainly just keep good records, use our reports or your payroll company's reports if you're not a client of ours. There's a new report coming out from us that is going to really help you account for this. And then lastly on this FAQ, is the $100,000 limit based on monthly or the 8-week calculation? This has come up. One of our clients asked this question, and it really made me start thinking about the calculations, because if you are a weekly payroll, 8 weeks of $100,000 person is $15,384. If you are a monthly payroll, 8 weeks of $100,000 pay is $16,666. So that is anybody's guess exactly how they're going to calculate that. I would calculate it to get the full amount possible that you can, but you don't necessarily want to go changing your payroll frequency unless you absolutely have to. So I would make that decision on your own, but also talk to your CPA and determine which one makes more sense. Okay, the most recent guidance on the PPP is they put out a safe harbor to allow you to turn back the money. Most of this is due to fraud. There have been companies that are fraudulently set up to go get this free money, and larger companies, publicly traded companies that they felt like didn't need the money. So they set up a safe harbor date. Originally, it was May 7th, that you could turn the money back in if you really felt like you could not certify that you needed it. They've extended that to May 14th. They're also, saying that if you took more than $2 million, you're definitely going to have a full audit. So if you don't need it, you need to be really careful. If financially you don't feel like you could prove that you needed this money in this time, that financially you were affected, just be careful, because who knows how long they're going to have to do audits. But I think the audits will probably be for the larger ones. So anyway, you have until May 14th to turn that money back with no questions asked. We expect, because of that May 14th date, we're really hoping that the more guidance is to come so that we can give you real valuable information on making sure you maximize the forgiveness. Because some of us are running out of time. You've got a few weeks already in to spending the money. So when people ask me questions, I just say the spirit of the PPP was to keep employees on payroll. So if you're doing the right thing around that, and you're looking to pay people, and you're using that money 75% at least for payroll expenses, and you're following the rules, you're within the spirit of this thing. And I just think a lot of these rules are coming down because there are those that are not following the spirit of the PPP and what it was meant for. Lastly, continue to just keep great records. Our report will be available, I think, on May 15th to allow you to see which part should be forgiven, applied for forgiveness, which part would not, like the employer federal tax. And that should be available May 15th. Keep great records. I'm going to get Barb to make sure she adds to the notes, the spreadsheet that I have received from a CFO that you can use if you don't have anything. And we'll get that out to you. Help you just keep great records. That's my biggest piece of advice. So with that, and then I'll finish it off after this, but with that, I'm going to hand it off to Scott to give some information on Georgia claims, unemployment claims, and returning to work. Scott?
All right. Thanks, Lori. I got a few intro comments here. One, normally this meeting software that we use will automatically show, like that, shows the video. For some reason, it didn't do it for Lori. I don't know why. So Barb thought she was going to get away with an intro, but she was on screen the whole time, so it was pretty funny. disclaimer overall, and we're just saying this to everybody we talk to, is, hey, we're the information when we present it is correct as we can get it when we present it, but that doesn't mean it might not change eventually or anything like that. So we are really honored to prepare this information to present it to y'all, and we appreciate you showing up each week to ask questions, because it helps us keep a pulse on what's out there. But also make sure you're talking to your bankers and people like that who are dealing with your loans to make sure everybody's on board with what you're doing. In the event board, if you see that on the top right of your screen up there where it says event board, you can go in there. And we've added a few things to this town hall that you can download. So there's a sample recall letter. So if you're bringing people back from furlough or layoff, you can edit that letter. One of the questions that came in on the sidebar was, if we had employees resign, what kind of documentation do we need? And no matter what everybody's saying is, if you're bringing people back, you definitely want to have a documented offer or a recall letter. And then you also want to have a documented response. So the letter we have has a basically checkbox, yes or no. If people say I'm not coming back, they can check that, and you have it in your records that they chose not to come back. If you have employees who resigned before you even decided to bring people back, then you just need to get something in writing from them, like a resignation letter, email, something that's in writing with their date, signature that you can put in the file. So that's the kind of documentation you need for that. Also, another big question that keeps coming up is, what if employees refuse to come back to work? So there's a legal answer and a practical answer to that. The legal answer is, if you are following the CDC guidance and the OSHA guidance, and you're keeping your workplace safe, and you're cleaning, and you're doing all those things that you're supposed to do, social distancing and all that, then you can require people to come back to work. But if they say, look, I don't feel safe, that's one thing. And lawyers are saying, well, that's really not a legit excuse, but you do have union issues and safety issues if people say they're not safe and then you make them come back. So you got to think about that. The other thing is, if someone is immunocompromised, which is a word most of us didn't use before a couple months ago very often, you've got to get into the Americans with Disability Act interactive process, which basically just means that you're asking them questions about how does it affect their work. You're not asking them, how are you immunocompromised or anything. You're just saying, how does it affect your work? What can you do? What can you not do? Can we make some kind of accommodation, and go from there? And you want to document that as well. I'm reading some of these questions over here on the side, and one of them says, if we have people who are out of work because of childcare, they cannot work. So what do we do with PTO and that kind of thing? So the Families First Coronavirus Response Act had created that emergency paid leave, which was 80 hours for multiple reasons. But one of the reasons was, if you cannot work or work from home because you've got childcare demands, no childcare, schools closed, stuff like that. So if you have that situation and you have not already done that emergency paid sick leave, then what you do first is the emergency paid sick leave, which is 80 hours, and there's a specific dollar amount for that. And we have town halls and webinars on that on our site. If you're curious, you can go back or email us about that if you want more information. But if they're out because they don't have childcare and they cannot work, that's the key. If they're capable of working, then they're not really eligible for the emergency paid sick leave and the expanded FMLA. The expanded FMLA is 12 weeks total, but the first 2 weeks of that are unpaid. So during those 2 weeks, you would have earnings codes set up in your payroll, and then you would pay the emergency paid sick leave for the first 2 weeks. After that, you would use the expanded FMLA code to pay that, and there's limits of that per day. And that's only for people who cannot work or work from home due to their childcare demands. So if they're not eligible for the expanded FMLA, let's say they use the emergency paid sick leave, they're not eligible for the expanded FMLA, then you got to go back to your own company PTO sick time if you have that. If you don't have any of that, then you could talk to them about unpaid leave. So you got multiple options there. Okay, now I'm going to jump on my slides here. So in terms of Georgia unemployment, the unemployment claims are still all over the place for everybody. Some people are getting paid, some people are not getting paid. Don't sweat it, because that's how it is for everybody. It's just, they're just taking a long time to catch up. But I have seen this letter go out to several of our clients from the Georgia Department of Labor, and I just want to share this with you since most of you are in Georgia. So again, this is just for Georgia, but basically what this is saying is they understand that you're about to start bringing people back to work. And the big question that generates is, when do we take people off of our spreadsheet? Because in Georgia, employers are having to file claims on behalf of their employees. In the other states, employees are filing their own claims, but in Georgia, we're doing it for them. So when do you take them off the sheet? When do you leave them on the sheet? And that's a question that's coming up a lot. So what they've done is they've defined this that says, okay, you have a weekly benefit amount that they're calling the exemption amount or whatever of about $300. And I'm going to show you a couple of examples of this on the next sheet. If you have people who come back to work and they are still earning less than they were earning before, then you would probably keep them on your spreadsheet. If they come back and they're earning the average pay that they were earning before you went on leave and everything like that, then you could take them off the spreadsheet. But then there's some specific guidance about when people would be eligible to receive benefits or not on the next slide. But if you look at this last paragraph, it basically says, look, even though a lot of the language on the Department of Labor website says this is called a partial claim, this is not for people who you have terminated or laid off permanently or anything like that, it is, according to everybody you talk to, and they verified this by saying, look, even if you permanently laid off employees, we strongly encourage you to continue to submit the partial claims on their behalf until further instructions. So just keep doing it unless you're sure that you need to take them off of that, okay? If they identify people, they're supposed to add something to the spreadsheet that eventually says permanently laid off or terminated, so you can check that. That notifies the Department of Labor that they will eventually go directly to those individuals to file their own claims, okay? So let's talk about how this works with the dollar amount, right? So if employee A is getting $250 a week from the Department of Labor in unemployment benefit. So their weekly unemployment benefit is $250 a week, right? Based on their pay. Then you add the $300 exemption amount. So that gives them a total amount of $550. Now that $300 exemption amount does not mean they're getting paid that amount. It's just the dollar amount that the Department of Labor is using in their formula. So if they work for you 30 hours a week and earn $15 an hour, they earn $450. You're paying them $450, right? So then when you on your spreadsheet list $450 as the weekly wages earned, then the Department of Labor is going to look at that and say, okay, their weekly benefit is $250. We add $300 to that, which makes it $550. And then we're going to take our number, $550, subtract what you're paying them, $450, and see if there's a difference. In this case, there's a $100 difference between what you're paying them and what the formula is for the Department of Labor. So that means that they're eligible for $100 in state benefits. And if you get even $1 of state benefits, you also get the $600 federal benefit, okay? Employee B, who's earning more, $30 an hour, is earning $900 a week. So if you take employee B, who was previously getting $325 a week from the Department of Labor for unemployment benefits, add the $300, that gives them $625 in the Department of Labor formula, $900 or $625, right, minus the $900. So they're making more than the allowable amount through the Department of Labor, which means they would not be eligible for state benefits or federal benefits. Now, a question that came up a lot was, what if you're not eligible for state benefits? Can you still get federal benefits? Well, there had been language that had hinted that you might be eligible for the federal without the state, but I'm looking at this language right here, and it basically says not eligible for state benefits or the additional $600 per week in federal benefits. So that's all the clarification I've gotten on that, and we'll just take that for what it is. Okay, so return to work. This is another question that's coming up a lot is now that people are starting to come back or thinking about coming back, what if we have an employee with symptoms? What if we have an employee who was diagnosed or who is now saying someone in my house has just recently been diagnosed or needs to be tested, all those type things. So here's the basic, most recent guidance on this. And again, employers do have a little bit of wiggle room right here, but this is what's recommended. Okay. So this is for non-healthcare workers, not doctors, not hospitals, not dentists, right? This is for non-healthcare offices. And if you're symptomatic, so you have symptoms, you have been diagnosed, or you have not been diagnosed yet, but you have the symptoms, right? You've got the shortness of breath, the cough, and that fever, that kind of stuff. Then you're supposed to stay out at least 3 days after your fever is gone without the use of fever-reducing medications. And at least 10 days passed since the symptoms first appeared. So that may be 10 days total, and those 3 days symptom-free are within that 10 days, or it could be longer. So it's a little bit confusing. But basically, they're saying at least 10 days from the date your symptoms just started, and then you want to wait 3 days before you come back, 3 days where you're symptom-free without the use of fever reducers if you're symptomatic. Okay, and I know this is going to be very challenging for everybody who's trying to figure out how to fill roles at work. So your person is asymptomatic right now, but did have confirmed diagnosis, right? So they said, yeah, I was diagnosed, but I feel fine. I don't have symptoms. Okay, well, let's make sure we wait 10 days since you had your positive test. 7 days, what they're doing is they're saying 7 days after the results plus the 3 days of social distancing, which is kind of similar to the slide before. So it looks like you're looking at a 10-day period on both of those scenarios. But if the person who has no symptoms later gets their results back, then they should look at the symptomatic time frame. All right, so if they just have exposure, so I haven't been diagnosed, but I have been exposed to someone who is diagnosed, right? A lot of workplaces are going to have this where you've heard of contact tracing. And I'm advising people to be a little bit careful with that because you don't want to get into privacy issues or anything. But what you do want to do is say, if Scott was at work and now Scott has let us know that he's been diagnosed, then you want to kind of talk with Scott about who did you work with? Who have you been close with? Have you visited any customers, worked with vendors, other employees, that kind of stuff? Because you would need to notify those people. We did have someone on our team who has been diagnosed and you were in contact with that person in the next week. We would recommend that you get tested. For your employees, you might say, look, we're recommending that you have a 14-day home quarantine period. And that's kind of what that means. So this is going to be really challenging for people as they deal with having to send people home and make sure you're safe before they return to work. Continue to think about ways that people can work from home and flexible work schedules and how you will fill key roles if someone happens to get sick, because it's not over. This is still going on, and there still will be cases, for the next few months, maybe in the next year. We have no idea. But hopefully we can all get back to work and this stuff will dwindle away pretty quickly. Last thing I just wanted to hit on here today, because this is starting to come up a lot, is if you're considering remote monitoring software. Now, if you're an IT company, my brother-in-law is a programmer, software developer. He works from home a lot, and they've always had this monitoring software. And what he tells me a lot is what people will do is they'll just log in the morning, then go about their business doing their stuff, and it just shows they're logged in, right? Now, the software is getting smarter and smarter, and I showed some examples up here of different software brands that are pretty popular right now. And it can monitor your keystrokes, how many emails you sent, if you're productive or not. It's, all kinds of stuff like that. But it can also be pretty intrusive, and people can be upset about it in terms of privacy, because they're like, what if I want to check my bank account, or I want to jump on my personal email for a minute over lunch? Is this going to monitor all of that stuff? And people get a little upset about it. So I just say, be careful with it. Make sure you know what the intent of it is, and really communicate up front with your employees why you're doing it, how you're doing it, the way it works. And then I would recommend, if you do use some of this software, that you select some that allows people to kind of block it out. They can exit from it and block it out. So if they do need to check personal email over lunch or jump on their bank account or something like that, which all people do, right? Make sure they know how to do that, so they understand that they do have some privacy And then you need to think about, as a leadership team, how do we use this information? Is it used to benefit the employee as a resource and help with productivity, or is it used just to monitor what they're doing and then penalize them? I used to have a client who put a video camera over a office manager's desk, on top of the desk, looking down above her, so she was not comfortable wearing a shirt that wasn't up to here or anything. So that by itself was bad enough. But then he would call her every time he saw her doing something that didn't look like work. What are you doing? And that's the extreme of where you don't want to go, right? So be careful about the Big Brother type stuff. I know this software is very popular, but really think through how you're going to use it, why you're using it, and what the benefit is to your business before you jump on that, even though these companies are all doing very well right now. So a couple other questions I just saw off to the side. One of them asked about long-term disability. What if you have an employee on long-term disability? Does that employee need to come back for the FTE count during the 8-week period? I'm guessing that you're asking, would you start paying that person? Because if they're on long-term disability, that means they're unable to come back to work. So usually when people are on long-term disability, they don't come back to work. I mean, what a lot of companies do is they put people on short-term disability, and then once they transition to long-term disability, that's when most companies will let them know that they're separating them from payroll. In other words, they're not active employees anymore, and say, we hope that you will be able to return. Please notify us when you are able. We can talk details then. But so in this case, I doubt the person would be able to come back and actually work, and you wouldn't want to pay them while they're on long-term disability. So I'm thinking that's not going to happen, but I don't know the answer about how that would affect your count. I'm assuming that would be treated as if somebody who left and is not capable of coming back. So I would think you'd be safe there. No guarantees. Okay. That's my quick spiel. We'll jump into the Q&A. I'll let Barb take back over.
Awesome. Okay. Future of town halls. Lori, did you want to go over that real quick?
Well, just quickly. So Scott, you're going to probably stay on the hot seat there in the video, but that's okay. Oh, here I am. So future town halls, we want to continue to help navigate this chaos with you. So we'll continue to do this until you guys don't want to hear about it. I'm hoping in the next couple days before, May 14th, we're hoping, but that's only a couple days away. We're going to get more guidance. So we're going to continue to, as soon as we get it, we're going to get it out to you. We want to keep you current on HR and compliance issues. We want to do some thought leadership on the future of work and how we can help. We're going to have some guest speakers. This is down the road, not right now, because this stuff is, we're still trying to navigate all this, but we're going to do some guest speakers around, growth, how to grow your business, jumpstart back once we start doing all this craziness. So we've got a few things that we have as ideas, but most importantly, if you continue to submit questions, and it could be totally outside of PPP and for Families First, we'll start tailoring some content around that. So thank you for submitting those, and I'm going to turn it over to Barb to go ahead. I see some of the questions in the chat, so we'll answer those as well. But I want to go ahead and answer the questions that were already submitted first, and then we'll get to these shortly.
All right. Let's start with Mike. Lori, Mike asks to please go over the PPP as what it pays for as far as which taxes and payroll fees.
Okay, so the PPP is what it's not going to cover. Well, it covers whatever, it can cover some of this, but as far as the forgiveness amount, the forgiveness is related to how you calculated the payroll as well. So, or calculated the PPP loan amount. So you cannot use it. The forgiveness will not go against employer federal tax. So Social Security, Medicare, employer is not going to be part of the forgiven amount. Anybody over 100,000 prorated, that piece of it will not go to be forgiven on the forgiveness calculation. If you used if you use tax credits for the Families First, extended leave, and FMLA, you can't use that part. to go against the calculated forgiveness amount. So that's the majority of the items. And then, of course, you've got eligible expenses that can up to 25% that can also go against the forgiveness amount. Utilities, rent, mortgage interest, and that type thing.
Elizabeth asks if workers' comp can be applied to the PPP monies.
I have not heard workers' comp as being a part of it. I don't know. I don't know 100%. It's a great question. Barb, if you'll write that down, or you'll keep access to all these. We try to get the answers to those, to the questions we don't know answers to, but I'll find out.
All right, Elizabeth, we'll find out and we'll get back to you. What about mileage reimbursement? Is that part of transportation? I think you covered that earlier, but.
You can use, well, I've read, so they haven't really issued full guidance on what transportation means. They did issue some guidance around gas, cost of gas for business vehicles. They have not said anything about mileage reimbursement. So that's still up in the air. That should be clarified shortly. Okay. So keep track of it, and let's hope that that's going to be included.
Great. Scott, we've got a question here from someone in HR who works in a medical billing administrative office, and the executive team is kind of like, oh, the cleaning crew is doing enough, but she's not quite comfortable returning to work yet. What can she do to help protect herself and employees in the workplace, considering that she doesn't think the executive team's doing enough?
Yeah, there's a few things you can try. One would be to make sure they're educated on the latest and greatest info, the OSHA guidance, the CDC guidance. You know, if you have a corporate attorney, you can talk to that person as well and say, hey, help me present the case on why this is important and what kind of liability we could have if we don't get on this train, you know. So HR people are usually involved in presenting the plan or designing the plan on how to return to work, including what are we going to do different for safety for our employees? What are we going to do for social distancing? Are we going to stagger schedules? Are we going to have half days and all kinds of stuff like that? So I'm seeing all the different variations of this. It's pretty interesting to see what people are doing. And I would suggest presenting that plan, making yourself part of it if you don't feel comfortable coming back. The challenge is going to be when people say, I don't feel safe, I'm not sick, and the company says, well, it is safe, we've done everything we can do. And then there's going to be a little standoff there. I'm sure there are going to be some people who lose their jobs over that kind of stance. And then there's going to have to be things that just play out, in the court of law that say, okay, which party was right in that circumstance. As of now, everything is saying that companies, if they're taking safety precautions and doing all the things they're supposed to do, that they can require people to come back to work, and saying, I don't feel comfortable is not really an excuse. So that's the reality of what it is right now. I hope that's helpful. I also saw another question that said, what if we bring employees back and we have a plan or policy that says, you need to keep 6 feet distance, you can't have 20 people in the break room and all that, and then we have employees who violate that, what should we do? Well, you should have a modified policy, and one of the little blurbs that we attached to this was a policy change notice that you can give to all employees and an acknowledgement that they should sign. So please edit those and use those. They're attached under the event board here in the town hall. And you can edit your policy, submit it to employees, and basically have everybody sign saying, I understand and agree. And if they violate those policies, you could address those issues just like you would any other policy violation or behavior issues at work.
Okay. Big question coming from Georgia. I permanently laid off 2 employees, but never filed with the DOL. What do I do now? Thinker.
Well, I would ask those employees if they have already filed unemployment claims directly, and if they're getting paid or not. If they have already filed and they're already getting paid, and then now they appear on a spreadsheet from the employer, they may stop getting paid, because I've noticed that anytime there's a change in the information or the way the claim is filed, it causes a pretty strong delay on the payment and the communication. And The only risk there, I guess, is that because Georgia employers are supposed to file on behalf of employees, if you did not do that and they filed on their own and got benefits, then the employer can be held responsible for the full cost of those benefits. So the total dollar amount that they receive while they're on unemployment could be charged back to the employer. So it's a pretty big penalty for not doing that. So safest thing to minimize your exposure dollar-wise would be to go ahead and file for them and just say, look, I didn't understand that I was supposed to do that. But find out if they're already have claims, and if they do, you just need to let them know that I'm filing for you and y'all need to stop filing so this claim takes precedence, but it may cause a little bit of a delay.
Okay, thanks.
Yeah,
Laura.
Yeah,
Maureen? Yep.
Oh, I'm sorry. I'm going to jump in real quick because I saw a couple here, and then I want to make sure we get the pre-filled questions. But it said, I can't tell if I will need the money. The effect will have a lag for my company. If I don't need it, have no problem paying it back. But when does the 1% interest kick in? That is an issue for a lot of companies because there, in some cases, restaurant, hospitality, they were immediately affected. Other cases, there will be a big lag, and that's a challenge. So the intent was, I keep going back to the intent as of right now. Some of this could change. I know the AICPA has tried to push for some changes in timing of this forgiveness, but what I've read is that would take Congress to make a change to that. So the chances of that happening could be minimal. So the intent was for those 8 weeks to get quick payroll out to employees who otherwise would have been laid off. So most likely what you'll have to do is either pay that money back, or, if you do take it as a loan, the 1% interest, the payment is deferred for 6 months. But it would take effect immediately after those 8 weeks. So the forgiveness is only for those 8 weeks. Then you'll submit a forgiveness document to your lender. They'll make a forgiveness decision. And then the payment deferral is 6 months from then. And then it would be paid out over the next 2 months. And then I also saw if you applied for the EIDL and didn't hear back from them until after you received the PPP loan, and it was based on the $1,000 per employee, is it still forgiven or a grant, or does it reduce the amount forgiven for the PPP loan? I've looked that up, and according to my research, that it would reduce the amount forgiven. So if you got $10,000, that is a grant, up to $10,000 from the EIDL emergency fund, then that $10,000 would come out against or reduce your forgiveness amount on the PPP. So that is what I have researched, and that's what I've seen.
Okay,
Bob,
thank
you.
Yep. Scott, Priscilla asks, can we test employees for active COVID-19?
Yes.
Okay, great.
Yeah, you can require temperature checks. You can require people to get a test before they come back to work. Now it's two-part answer to that question. Yes, you can require people to get a test, but it's not easy for everybody to get a test still. Easier for some people, but you can do that. Be careful about how you use that information. So you don't want to give them your test yourself unless you have like medical professionals on staff or on site. I wouldn't want to just go, hey, Barb, you're out front now, sticking a thing up everybody's nose, giving them a test. That could be questionable. So you want to think about how you're doing it as well, and then what you're doing with that information, because it is protected information. You don't want to have a sign-up sheet where everybody stands out front testing their temperature and you go, Scott was 100 point whatever, Lori was this, because that's considered medical information. If you're doing temperature checks, you just want to basically say, we did it. Yes or no, eligible to work? Yes. If no, then okay, we can pull somebody off and talk to them about that. All right, I see a few other questions. You want me to hit some of these, Barb?
Go for it.
One of them says, if an employee quits, are we required to file the unemployment claim? No. In Georgia, if the employee quits, then they have to file their own claim. You would go ahead and give them the Georgia separation notice, that DOL 800 form. Sorry, I got a bug flying around. You would give them that form and they would file their own claim directly if they quit. Okay. If you already had them on the spreadsheet and they quit, you'd take them off the spreadsheet. and you let them know that they can file their own claim going from there. Another question says, how should employees figure out overpayments from unemployment if they come back in the middle of the week or that kind of thing? And I think that's kind of beyond your control as an employer. And I understand that people say, hey, maybe they got overpaid, but that's really not something you need to worry about or control. As long as you're reporting what they earned each week on the filing, then that will affect how much they're getting paid. So they will catch up on that and correct it. I would not go to the employees and say, hey, you got paid more than you deserved on unemployment, needed to take some of that money. That's going to cause nothing but problems. The other question was, we're a medical practice. We have people who are out on the expanded FMLA leave due to childcare. Can we bring them back? Well, you can't force people to come back off of FMLA before that 10-week period is ended. And it is a job protected leave as well. So after the total 12 weeks that they've been out, they're supposed to be restored to the same position. The government's answer to that question is you've got to talk with staffing agencies and temp agencies and see if you can fill those positions while they're out. You could reach out to people and say, are there days you can work, and do kind of an intermittent leave where you pay them while they're working when they're able to work, but then they take the expanded FMLA for the days that they cannot work due to childcare. So that is another option.
Great, thanks. Lori, Stephen asks, we did not include housing allowance in our initial calculations, but can housing allowance be paid during the 8-week period used in their documentation of the 75% required?
Yes. So the housing allowance is part of, it could have been used to calculate, but even if you didn't use it to calculate, you can still use that money. The forgiveness amount will apply for the housing allowance piece. So yes.
Okay, great. And Mike asks, trying to hire the same amount of employees we had before COVID-19, as some laid off employees found other jobs. If 8 weeks goes by and we have less employees than before, how does that affect their PPP?
What was the first part of that?
They're trying to rehire the same amount of employees they had before COVID, because
Right.
some of their laid-off employees found other jobs while they were out. So if the 8 weeks goes by and they can't recover the same number of employees, what happens?
Well, they have until June 30th to hire back the number of employees. So you have you spend the money within 8 weeks, but you have until June 30th to hire back and to get the same number of employees. So as of right now, that would be the goal, would be to hire back other people. That would at least get you to the FTE number that you're trying to get to.
Okay, great. Carolina has a good question. What account would you recommend for recording the PPP loan funds once you receive them? Other current liability or long-term liability?
So thank you for that question. That was something I did ask my CFO, and we can also share some information with you and get more detail. But there's a two-part, with every accountant / CFO type, there's never a straightforward answer, but the simple answer is a current liability. But there is more complicated is both due to the 2-year payback. So we can get you more information regarding the GAAP accounting piece of it if it's a 2-year, if it becomes a 2-year loan. So the short answer is current liability. There is a longer answer to make it accurate from a GAAP perspective. So if you want more information on that, let us know, and I'll connect you to a resource from an accounting perspective.
Thanks, Lori. Scott, Tim wants to know, can you clarify at what point are hourly employees able to file for unemployment, even if they're only short 2 to 10, even if they're only 2 to 10 short each week?
So if you're in Georgia, Georgia employers are required to file for employees. So basically their measure is if they're making less than they were making before, if their average pay has gone down as a result of any changes you've made, you've reduced hours, reduced pay, or anything like that, then they would be included on the spreadsheet. Other states, employees are filing their own claims, and it's the same kind of thing for most of them, which is if you're making less than you were making before, then you turn it in. And the safe thing is just to file for it. Now, if they don't get money, then that's the State Department. In Georgia's Department of Labor, other states it's called different things. Some have an unemployment agency with a different name, but basically that's their decision. So as long as you do your part, which is they're making less money, I'm reporting, or the employees are filing directly, then that's okay. That doesn't mean they're going to get paid, because they should be paying attention to the wages that are getting paid each week. And then once they're back to their average weekly wage, then you don't need to report for them anymore in Georgia, or they'll be notified. If they're filing their own claim, you may need to report to the state. I don't know how it works in the other states, like once they're back to full pay, how you notify the state. Maybe you say you've returned them to work or something like that, but there should be some kind of notice to let them know that they're back in work earning their full pay.
Okay, thanks, Scott. Lori, Beta asks, if your payroll is paid 2 weeks after the hours worked, like hours worked April 1st to 15th is paid on April 30th, and you get your PPP funds on April 16th, is the April 30th payroll included in the loan forgiveness, even though the hours were worked prior to the funds being received?
This is the question everybody wants to know, especially if you're in the payroll business. But there's no specific guidance on that other than the wording says payments. So the main thing is we don't know whether they're looking at cash basis or accrual basis type accounting. So that's really kind of the question, pay period versus pay date. The main thing to make sure is that you work with us if you're our client or your payroll company to confirm that you're going to get the full 8 weeks worth of payroll covered. And we'll work with you if your pay dates are a little weird to make sure that you get the maximum forgiven. So it's anybody's guess exactly how they're going to come out with that. It's all of us think in those kind of details, but Congress and the SBA, they don't know as much about payroll probably as we do. So they didn't think through that ahead of time. That should be coming shortly, but just make sure you're keeping good records and that you get the full 8 weeks. That's the key. 2 months of payroll you want to make sure you can get. And if you need help with looking at those dates, let us know and we'll help you out on that.
Okay. And then a lot of people are asking about adding bonuses. And I know you touched on this before, but like pre-planned bonuses, like Christmas bonuses, Christmas in July, whatever. Yeah. Do those count? Are we doing those?
So there was nothing in the language as of now, although as we all know, it changed with the application process changed over time. So the forgiveness process could also change, but there was nothing in the language that prevented bonuses from being paid. If it was pre-planned bonuses and this would be the normal time that you would do it, I would feel fairly safe as long as you don't go over that $100,000. Think about the $100,000 limit. But I would be really careful, and this could be something that changes, but I would be really careful in prepaying things that normally would not be paid right now. People have asked about prepaying rent and prepaying bonuses and things that would not normally be paid right now. So if it was in the normal course of business, yes, I would feel comfortable with that. If it is trying to prepay, I would be careful with that until we get further guidance.
Okay. Scott, Kristen wants to know, what data sources are employers using to determine when to reopen their offices?
I think people are looking at the World Health Organization. They're looking at CDC. They're looking at some of the law firm guidance. There's some OSHA guidance on preparing and returning and all that kind of stuff, and just monitoring all of those. And then really more than all of those is your city, state, government. What are they requiring in terms of reopening? Because a lot of local governments and state and city governments are requiring certain types of screening or no screening and reopening, and limits to crowds and things like that, essential business, unessential business. So really, I would start with the state and city first and say what's okay, what's allowed, what's expected, and then go from there, and then realize that there's never a problem with being safer, more conservative, more cautious. You can always do that. in Georgia, when our governor opened it up, and I was getting calls from all these people who don't live in Georgia, are y'all crazy? And then also, I wish I lived there so I could go out to eat, and I was like, look, it's not like everybody just ran out and went bowling and got tattoos and went out to eat or whatever. So just pay attention to what's going on in your city and state first, see what you can do, what you're allowed to, not allowed to do. And then you really got to look at the other safety guidance with those sources that I mentioned and say, okay, do we need to prepare our workplace? Because it might be that your office isn't ready yet for people to come back. You can also talk to your building management if you're in an office building and find out what they're doing. We got a great letter from our management company this week, really detailing all of the things they're doing to keep the building safe, which I thought was great. So, talk to your building management, your maintenance staff, and see what they're doing as well to help prepare. And then we'll be continuing to share information in terms of sample, like return to work plans and policies as we develop them and get good ones. I also saw another question here, Barb. I can just jump on as they're popping up. One person asked, I've heard that you have to keep your FTE count consistent throughout the 8-week period, all the way through June 30th to be forgiven. Now, the question that I keep getting is, what if companies have said, we've heard that if we hire people before June 30th, then we can add those people to our head count. So why would we bring everybody back right now? Why don't we just wait till, June 28th, hire them all and do that kind of thing? And the way the guidance is written right now, legally companies could do that. But because people have started to think about it and talk about it, there have been a few statements released saying that is not the intent of the law, and people who do that will be in trouble. In other words, if you try to game it and say we're just bringing people back on June 30th so we can say that counts and hits our head count. So unless you're closed.
Let me jump in on that real quick, because the other thing to think about, because I see what you're saying, but the other thing to think about with that is you still have to have spent that money within those 8 weeks. So if you the portion of, there's two pieces that you get reduced. One is, based on FTE, and one is based on wages paid. So you really have to be careful that if you didn't pay anything out for those 8 weeks and then you just hire everybody back, you're going to have a problem, because you're not going to have been able to pay that 75% pay, up to 75% of the payroll piece out in the right amount of time. So I think you have to be real careful on that one.
Okay.
One other question I saw is, I saw a question on health benefits. So the employer health, anything considered health benefits, vision, dental, medical, the employer piece is included in the forgiven amount and the calculation. I also saw simple IRA employer. So employer retirement benefits paid should be covered as well. Barb, do you have another?
Yeah, I was going to play a game with you called Included or Not. Car allowance, is it included? No?
I don't know. I don't know. That's a really good question, because if it's part of their regular compensation, you could make an argument that it would be. It's just, there's a lot of things that have not been specifically spelled out. But if that's part of their regular compensation and they're still getting that compensation, I can see the argument being made that would be included. But so you said
something interesting. They're part of their regular pay. So someone else asked, what about reimbursement for not taking public transportation? That's not normally included, but I can see why it's an extra threat if they're on a packed MARTA bus or something.
Yeah, I don't know. We'll have to do some research on that. I think there's so many specifics that everybody has that has not been, like I said, Congress didn't think through all of these things, right? So SBA hasn't thought through all of these things. We're hoping to get the final numbers. And I think it's going to there's going to be some interpretation, I believe, from the lenders. And I've seen a potential forgiveness spreadsheet that was very simple. Now we'll have to see if it would fly after the SBA guidance is finalized, But I think a lot of us are really overthinking this. And I think that it's going to come down to, they can't really think of every specific situation. And I do believe the lenders are going to have some say-so in how it's going to be interpreted.
Okay.
So I would talk to your lender on some of these questions if you can.
Okay. I'm going to ask you one more question. I got to ask Scott a question. The question for you, though, is original PPP application asked us to include 1099 independent contractors. Then, of course, it didn't. Can you use your PPP funds towards paying an independent contractor, even though they're not on actual payroll? Does it still count?
Well, so the guidance that came out was that it was not supposed to be used to calculate the loan amount. Some people got their applications in so early that it was included. I know several that did that. And the lenders were not, they were so inundated that they didn't verify whether 1099s were included or not. So my advice on that would be that piece, we know that piece will not be forgiven. So that piece that would go to pay any 1099 contractors would have to go toward being a loan that you would pay back over 2 years. So just know that it won't be forgiven. That's all I could add to that, really, because the 1099 contractors were able to apply for these themselves. Although I've seen a lot of them struggle with that because they weren't able to apply until a week after everybody else, and then they didn't get in line in time. So if you are paying them, I don't think it's going to be a problem, but you've got to know that you won't get that piece forgiven.
Gotcha. Scott, what are the documentation requirements for FTEs that fall short? Elaine said that she never laid off any of her employees, but some of them turned in their resignation for various reasons. Either, I know some people said fear. She had a few people who entered a graduate program that they had applied for. What kind of documentation do people need to submit for that?
You just like normal circumstances, when you have employees resign, you want to get it in writing from them because you don't want people to come back after the fact and say, I didn't actually resign. They let me go, or they eliminated my position or something like that. It's just better for your records to have something in writing. So you want to, for the people that you're offering to return, you want to have that offer in writing to them where they can choose to accept it or not accept it and then give that back to you. For the people like that who have just voluntarily left, so they're not coming back, you just want to get it in writing from them. Make sure it has their name, their date, and their signature on there saying that they're leaving and they're not coming back. And that should be enough to show that, look, these people voluntarily left. We'd hoped to bring them back. They decided not to return. And as of now, they're saying that can be deducted.
Gotcha. Lori, Donna wants to know, and fam, I know that we're just past noon, but we're going to answer a few more questions. If you want to stay on and ask or hear the answers, please feel free. If you have to jump off, I know we ran a little long on this one, but we've got some good questions coming in, so want to make sure we answer them for everyone. If you don't take the tax credit for Families First, then can you count this as part of payroll? I thought the key was just that you can't do both.
Correct. Yes. If you took the tax credits, if you use tax money to cover that cost, then you cannot use that money toward the PPP forgiveness amount.
But if you don't take the tax credit, you can.
Right. Yes.
Okay. Great. If the EIDL reduces the PPP, then do you only have to justify the PPP up to the reduced amount? I think, did you already cover that one? I think you did on your own.
I think so.
Okay.
There might have been if the EIDL reduces the PPP loan, then do you only have to justify the PPP loan up to the reduced amount? Because in this case, the $7,000 is automatically a grant. Well, the key was if you got the PPP funding, and then after you got the PPP funding, you got the EIDL grant. The one thing that we know is that the amount of the EIDL grant, which will be a grant, if it's up to the $1,000 per employee, that the amount of that EIDL grant will just be subtracted from the forgiveness amount.
Okay.
I saw one here. I'll answer this. I had a small client that has the owner and one employee ask if they can do one payroll to cover all PPP funds, or should they continue the regular weekly payroll? That really is that's a question they can talk to their accountant, or I don't think that would be an issue. The only thing is that I would be concerned about is just making sure, the reason we're trying to prevent people from doing that, it causes issues if you have deductions in payroll. It could cause issues if people are used to getting paid weekly and they get paid in one lump sum. I could see that being a problem with some people. So I think that's up to you. I don't know that they're going to get into that level of detail when they're looking for forgiveness, but they are going to look at payroll reports. So if you're paying weekly, if you pay weekly, it's pretty easy to continue to pay weekly, because then you've got a full 8 weeks that you're paying them out. So I don't know that I would recommend just one lump sum, but that's really up to them. Can you exceed 75% towards your payroll expenses, and would the excess be considered as forgiveness? So for instance, if you hired more people during this time and you exceeded the 75% to paying regular payroll wages, I don't see a problem with that. You don't have to use 25% of it for other expenses. I would just be careful prepaying people. That is, there may be no guidance. There may be no way for them to verify that, but they will be looking at reports. Depending on the lender, they're going to be inundated with these reports. Are they going to be able to verify that you prepaid people or not? Who knows? It depends on, probably that depends on the lender. But I don't see you don't have to pay 25% to other expenses.
Okay. What, on that note, I believe, can you clarify the SBA direction of expenses incurred and paid?
That's the same. I think that's the same question we're all asking, which is whether or not we're looking at cash basis or accrual basis accounting when it comes to payroll. And that really has not been clarified. We're waiting for that, hopefully in the next day or so. And again, I think most of us are overthinking it. But the main thing is to make sure that you get the full 2 months worth of expenses. So 2 months of 2 months of rent, 2 months of utilities, whether it's 2 months of payroll, whether it's pay date or pay period date. I think it's just to make sure that we get the full 2 months, and then hopefully we'll get more guidance in the next day or two.
Okay. Last question here from Marlo. If you have an employee that took advantage of both EPSL and EFMLA under FFCRA, and they were paid 2/3 for caring for small children.
FMLA, yep.
There you go. But now we receive the PPP. Don't we have to pay them 75% up to 100% now to have the loan forgiven?
That's a complicated one, Scott. I need your help on this. But go ahead.
I was just going to say, when I read that, I mean, the payments for the emergency paid sick leave and the expanded FMLA have a max daily amount and then a max aggregate amount. So the intent of those was for you not to go over those amounts. So that's what makes this complicated, is if you have people who are still on that leave, and I understand what you're saying is, look, if they were back at work, we'd be paying them more than what they're getting under this max in some circumstances. I know you have to pay up to the max for those specific leaves. I don't know what would happen if you paid them on top of that. And I haven't seen anything that addressed that. Lori, have you seen that? I would think maybe you bump up what other people are getting to hit that 75%.
Well, so what she's saying, don't we have to pay them 75% up to 100% now to have the loan forgiven? The wages, it depends. I think the question is going to be regarding full-time equivalent employees. And then there's also a question regarding wages. So you only have to pay people you can have a wage reduction up to 25%, and that will not count against your forgiveness amount. So I think that may help answer that question, that you don't have to be at 100% anyway. You just can't be over a 25% wage reduction to get a reduction of your PPP forgiveness calculation.
Wasn't that 75%, they're looking at individual pay, right? It's not just a total payroll dollar.
Individual pay.
So in that case, if you're talking about these specific people who are out on expanded FMLA, maybe you pay them the difference between 2/3 and 3/4.
5%, yeah.
So you're saying I'm complying with both, and there isn't anything that I've seen that says you cannot do that. And if you ever need to justify it later, you can say, show me where it said not to do that, because it doesn't. And I think you'd be safe doing that.
Yeah, and I also think, this is just my opinion, I also think that the lenders that are going to be verifying this stuff are not as smart as not that they're not as smart, but they're not thinking to the level of detail that we all know about, that we're all running. Most everybody on this is in some way, shape, or form very involved in payroll and benefits and how we calculate these things. And so I think we have a lot more detail in our minds versus how they're going to be verifying these forgiveness applications. I really do, but there's so many nuances to it that that it's going to be hard for them to figure all this out. So I think if you stay within the spirit of it, we should all be in pretty good shape. But we'll see. Hopefully in the next day or two, we'll get the full guidance and we'll get it out to everybody as soon as we have it.
I got one more point from Marlo on that question is, make sure that when you're doing that, if you're paying under the expanded FMLA, you're using that pay code specifically so you can track that later. And then your other money you pay would be regular payroll, right? So 2 different pay codes. Don't lump it all in. You want to make sure you got good tracking for that later.
The other thing is around that is when you calculated your loan amount, those were not included in the calculation, should not have been included in the calculation of how much money you got anyway. But now if they went out on leave after the fact, after you calculated, if you calculated your loan amount based on 2019, that's incorrect. So you calculate your loan amount based on 2019, you have a certain amount. And now in 2020, you've got a certain amount of people out on leave on FMLA. It's a complicated situation. I just think you stay within the spirit of the guidelines and you should be fine.
All right. And then Tamika, we are going to get that checklist spreadsheet that Lori has from her accountant out to you guys. And Priscilla, best practices recommended for COVID-19 work area ongoing. We will continue to provide updated information on that. And we are going to be rebranding our COVID page to be more along that future work getting back in and best practices for that. Lori and Scott, anything you want to add before we close this out?
One last thing that I'm thinking as I speak, but again, when you calculated the loan amount for PPP, there was a section on the calculation where you reduce the amount of the loan amount for any current employees that you've got on that leave, the Families First, the sick leave or the FMLA, you're supposed to subtract that out. So I think that was the purpose in reducing the loan amount by that. So, but then if you had people out later, obviously that would not apply. So I think it's going to be complicated, but I also don't think that that the lenders are going to be able to handle every single nuance and issue that we can all come up with. So that's all I've got.
Yeah, I just say stay safe out there, and if you're not a current client of Thread, please consider us for your payroll and HR needs. We want to continue to grow just like you do, and so think about us and refer us and call us if you need any help. We're here for you.
Yeah, and please submit any questions and content that you would like to hear about, because we're tailoring each one of these around your questions. So thank you for those, and we really appreciate it.
Awesome. All right. Stay tuned for your follow-up email. Thanks so much, everyone. Bye-bye.
Thank you.
Bye.